Okay, so today we're going to talk about one of the craziest developments you'll ever see in a stock market. Dave Portnoy and his army of day traders. This is a pretty mental story, and there are actually some really important investing lessons that we can all take away from this too. So let's get straight into it. Dave Portnoy was best known as the founder of Barstool Sports, a sports and pop culture blog. That is, until he created his alter ego, Davey Day Trader. So basically, he took $5 million, put it into his day trading account, and has been sharing his crazy journey on Twitter ever since. Most commonly seen recording hyped up videos and repeating his tagline of "Stocks only go up again and again." In fact, he even created his own 2 rules for investing. Rule 1 is that stocks only go up. Rule 2, when in doubt whether to buy or sell, see Rule 1. He's also recorded a short 30-second clip that you simply have to see.
Are you tired of the pinstripe suits and the blue check marks lying to you when it comes to your stock market investment portfolio? Well, before today, you've never had the opportunity to get real, fair, can't lose investment advice.
Just accept a superior being, a superior brain entered your world and conquered it. Deal with it.
Introducing DDTG Global. Our founder and chief investment officer, David Portnoy, is now offering his big brain to the common man. And it's as easy as
1, 2, 3. Stocks always go up.
Like I said at the start, this is one of the craziest developments you'll ever see in a stock market. But you have to acknowledge the intended tone here. Portnoy is not being serious. He's clearly mocking traditional investing techniques. And when he says things like, "I'm sure Warren Buffett is a great guy, but when it comes to stocks, he's washed up. I'm the captain now." You have to take it with a pinch of salt, as Portnoy admits himself he has bought just 1 stock in his life before the quarantine hit. So let's make that clear early on. Portnoy views this as a game and something to have fun with. As he says himself about the stock market, with the volatility, it is kind of like watching a sports game. And he adds, "Don't trust anything I say about stocks." Now, this is interesting. Portnoy compares investing into the stock market to watching a game of sports. Well, with sports put on pause for obvious reasons, we've witnessed a trend recently where typical sports fans have turned to other hobbies, with many people choosing investing or day trading. Now, personally, I'm a big sports fan myself, and one of the blessings of there being no sports is more time to focus on things like bringing you content. Well, Portnoy has used his time well too. You see, he is the founder of a blog which focuses heavily on sports. When there has become a sports vacuum, it's likely that many typical followers of Barstool Sports were looking for new hobbies and things to fill their time. Enter Davey Day Trader and his growing army of followers. In other words, what I'm saying here is that it's likely that Portnoy has spotted his typical followers moving away from sports towards day trading and seen a brilliant marketing opportunity. Think about it for a second. I'll be honest here, I had never heard of Dave Portnoy before recently, and now I'm here recording a video talking about him to you. If that isn't genius marketing, I don't know what is. So this is the key point. Should you trust a man with investments who has only ever made 1 trade before a few months ago and is claiming to be the new Warren Buffett? Well, of course not. Should you follow him if you want entertainment and understand that it's probably a brilliant grassroots marketing campaign? Sure, why not? But here's where things take a serious turn. So some analysts have warned investors to beware of the Portnoy top, claiming that the trading exploits of Barstool Sports' founder highlight an unholy speculative mix infecting stocks. Whoa, that sounds serious, but what does it mean? Well, according to Peter Cecchini, Portnoy's trading antics are pointing to a perfect symbol for how dislocated stock prices are from the greater economy, and that his attention-getting, wild style is emblematic of just how emotional and extreme stock markets are now. Combining these factors gives us the phenomenon known as the Portnoy top. In other words, Peter Cecchini is saying that he believes Portnoy's actions and the resulting fan base could indicate the market is near its peak. This is backed up by Lawrence Fuller on seekingalpha.com, who says this is a great story, and I am glad that we are inducting a whole new generation of investors into the marketplace. Yet their tremendous short-term success, coupled with arrogance, inexperience, and disrespect for one of the legends of our sports, he's referring to Portnoy's comments on Warren Buffett here, has convinced me this is one of the greatest contrarian indicators in the history of the game of investing. Stories like this don't develop at the beginning of new bull markets, but instead exemplify the irrational exuberance at the end of them, which is why it simply reconfirms my bearish outlook for the broader market. So in a recent video, I shared my thoughts that the market looks like a bubble to me at the moment, and quite a few people commented asking, if I'm so bearish, why am I not shorting the market? Why am I not betting on it going down? Well, as I actually covered at the end of that video, the best strategy any investor can use is to simply be well diversified. Regardless of whether you believe the market is going up or down, the data shows that you shouldn't actually try to predict which way the market will go. Instead, just build a well diversified portfolio which can perform well whatever is happening. So it doesn't actually matter if these people are right about an upcoming crash or not, because your portfolio should be designed for both bull and bear markets. So the reason recently I've been saying so much about a potential crash is because I want people to consider adding things to their portfolio which will protect them just in case. I'm not saying selling any stocks, and I'm not saying that we will have a crash. I'm simply highlighting that you should be well diversified, and I think there are many investors who are only planning on the market going up and haven't planned on the market going down. You should really plan for both potential outcomes. Now, this is an interesting development. After Portnoy tweeted a video questioning Buffett's decision to get out of airlines, volume in Jets, an exchange-traded fund tracking airlines, exploded. The 30-day average volume in the ETF went from $45 million to about $200 million. So it looks as if Portnoy's tweets are having a real impact on the trading volumes and perhaps prices of certain stocks. In fact, we can see the US retail investor volumes have doubled over the past year, and excitable new investors like Portnoy are contributing to market euphoria, which, funnily enough, is actually drawing in private investors, pushing up stock valuations in the midst of an economic downturn. Even more crazy, since the market trough, stocks in Goldman Sachs' Retail Favorites Index, which includes the likes of Tesla and Amazon, have risen a whopping 61%, compared with 45% for hedge fund choices by Goldman Sachs and 36% for mutual fund choices by them as well. In other words, the stocks which are most favored by the retail investors are the ones which are increasing the most, while the stocks favored by the institutional investors aren't gaining as much. Okay, so I'll be honest, this is cool. The idea that the average person is beating the professionals is pretty great, and congratulations if you're a part of this. Believe me, I'd much rather you make money than some random multi-millionaire hedge fund manager. All I would add is that it's generally best to be a contrarian investor. In other words, to do the opposite of what the market is doing, which often means taking profits when something is rising. Now, I don't know about you, but I've had so many occasions where I've seen my investment rising and thought, I can't sell it now, it's only just started. And then the price crashes, and I feel frustrated that I didn't take my opportunity to at least take some profits off the table. Here's another key point. We know that Portnoy has invested $5 million, which is a lot of money. I mean, I'm currently living with my family, trying to save up enough to get a deposit on a house someday. So yeah, $5 million is a big pile of cash. But everything is proportional. $5 million to Jeff Bezos, for example, is a drop in the ocean. Dave Portnoy is reportedly worth around $118 million. So we have to consider this when we ask ourselves, how much is he actually investing? Well, $5 million out of 118 is just over 4% of his total net worth. So how much risk is he actually taking? Well, if he loses all of his money, his net worth will go from 118 million to 113 million. Yeah, I think he'll be alright. In fact, if we consider the free marketing that Barstool Sports is receiving from all of this, the value of the company could easily rise and make him more money than he might lose in trading. So, is he really taking a risk at all? Or is this a calculated decision? Say what you like about him, but if someone is able to grow their net worth to as much as $118 million in this world, they know a thing or two about making money. But here's where this is different for you. Firstly, you aren't the founder of a company receiving free marketing from this, so any money you lose through trading won't be compensated for elsewhere. I'm also going to go ahead and guess that maybe you're not worth over $100 million, so you're probably not okay with losing a lot of money. Maybe instead, you're trying to turn a quick profit and seeing an opportunity here. Well, let's consider the example of Scott Nazareth, a 29-year-old day trader from Toronto, who believes older investors such as Warren Buffett are missing opportunities in technology and airline stocks, adding that he kind of makes fun of some of these investors. They just have a hard time understanding the new normal, the new business models. So I would agree that Warren Buffett has missed out on opportunities in technology investing over the past couple of decades. Buffett has even admitted his mistake on this. But if you or I begin to think that we know more about investing than Warren Buffett, well, the phrase pride comes before a fall comes to mind. By the way, I feel bad about mentioning Scott. He might actually be a really nice, smart guy, and this article has butchered his words to portray him as arrogance. So take this as an example, not a comment on him specifically. Let's contrast this with Purdue University student Cameron Coleman, who started investing about a month ago after a friend shared his Robinhood referral link. Coleman had been an avid sports bettor and said he turned to day trading as an alternative during quarantine. He now tracks stocks on 2 computer monitors he typically uses for gaming, and his initial $50 investment was up to $260 at the time of this article. You see, Coleman has invested $50, which I doubt is more than he's willing to lose. I mean, every amount of money is proportional to the person, and I've been a poor university student myself, but still, I'd be surprised if $50 is too much for Cameron to bear losing. If you're going to invest, start small and be safe. So, is Dave Portnoy a mad genius? Well, he's certainly mad. Just go check out his Twitter page and you'll see that for yourself very quickly. Is he a genius though? Well, when it comes to investing, I would highly doubt it. The phrase, stocks only go up, tells you everything you need to know. When it comes to marketing though, yeah, this looks like a pretty genius grassroots campaign. Like I say, I'm making this video talking to you about him. So overall, you kind of have to say yes. He is kind of a mad genius. Again, to reiterate my point from before, if you want to follow him though, do so for entertainment purposes only, not for financial advice. Now usually at this point, I'll let you know about a few other videos I've recorded that you could check out. But today, I want to take a moment to touch on a tragic story that has emerged recently. 20-year-old Alexander Kearns, a trader on Robinhood, recently took his life after finding out his balance was minus $730,000. He mistakenly placed a leveraged trade after Robinhood ridiculously allowed him to take out $1 million in leverage. To hear that someone so young took his life because of investing truly is a tragedy. So please be smart with your investing and never invest more than you can afford to lose. Thank you for watching.